market is getting to its final bearish leg. In today's video, I'm going to describe why I think there is just a bit more room to go to the downside before we get an eventual bounce. All right, so we're going to take a look at the large tech stocks, the SP 500, the NASDAQ, and the bonds. Without further ado, let's get started with the video. So first and foremost, if you guys are new to the channel, what we have to do when we're looking to see market direction is you need to monitor large tech stocks. You need to monitor the biggest stocks in the market. Apple, Microsoft, Google, etc. Right? Now, what we're looking at Apple, you can see that Apple is, so this chart currently is the daily chart of Apple. This is the Bollinger Band. These blue lines are the Bollinger Bands, okay? Now, the reason why looking at Apple is very important is because we could see that Apple is currently trading outside of the lower level of the Bollinger Band. What the Bollinger Band shows is the extreme overextension to either the downside or the upside. So if Apple was trading outside of the upper level of the Bollinger Band, it would show standard deviations to the upside away from the normal price action. So generally what ends up happening is when Apple or these large tech stocks, S&P, the NASDAQ, trade very far extended to the downside or the upside on the Bollinger Band, we get a return to the mean, a return to the average. And the average essentially is within this standard deviation. Okay? So currently, when you're trying to look at how much more room there is to go to the downside, when we are trading outside of the lower level of the Bollinger Band like this, it starts to show that there is not that much more room to go to the downside. Because if we're already overextended, does that make sense? Like, is what I'm saying making sense? Because, so look, just according to the Bollinger Band, we are very overextended to the downside, correct? If we are already very overextended to the downside, how much more room can there really be to the downside if we're already overextended? If Apple was trading up here, and none of this occurred yet, we were trading up here. The risk reward to be short up here after this red candle, spectacular. The risk reward to be short down here after the Bollinger Band is already overextended to the downside, it's not as bon appetit, is it? Like to basically be short into this weakness. So that's what I'm basically trying to convey. And the reason why I started with Apple is because Apple's a big mover. Apple has been moving the market for the past few months. It's been a major player, correct? Now, the fact that Apple is this overextended to the downside, to wrap it up, is a big indication to me that there is not that much more room to go to the downside with the overall market. Because if Apple is showing this, so yeah, now we could just zoom in. So you can see the Bollinger Band is within this candle, right? We closed outside of the lower Bollinger Band. Now, if we continue falling, right? If Apple gaps down and the Bollinger Band ends up over here, what do we have? We have multiple days where we're opening and closing outside of the lower level. That becomes even more overextended. So if we gap down lower and then we close a new low, things become very difficult to go short. Does that make sense? So one of the worst case scenarios that you would have for bulls is if we gap up within the Bollinger Bands and then we end up red. And if the red ends up closing outside of the lower level. So similar situation. So imagine let me just draw this out. Okay. So the Bollinger Band is over here. Okay. One of the worst case scenarios would be is if we gap up. So now we open here and then we end up closing outside of the lower level. So we're not as overextended because we opened within the standard deviation. But then within that same day, we closed outside. So what do we have? We only have one day where we closed to the downside in terms of the Bollinger Band with this, right? That's why I say that it would be the worst case scenario. It would be one of the worst case scenarios for bulls. Rewatch what I just said. It might take some time to try to to really understand what I'm saying, but the point is that for an overextension, for a bullish bounce, okay, let's just make it very, very simple. For a bullish bounce in the market, you want to see multiple opens and closes outside of the lower level of the Bollinger Band. If one of these days we end up gapping up and then painting a red candle, and that red candle closes outside, it's not as overextended and it becomes more difficult to be bullish, okay? So currently, that is the scenario. And what we're looking straight on paper right now, what we have in the chart in front of us is Apple is very overextended to the downside. It becomes way more difficult to be short on the overall market, on Apple, etc., when Apple is showing this much weakness. Hope that makes sense. All right. Next, let's take a look at Amazon. Amazon is showing weakness below the bearish level that I mentioned before. But this is still very, very clearly, this is a bull flag, right? We're coming back, tapping at this level. This could end up bouncing, right? What we really want to see is this 210 to 212 level on Amazon holding. We could fall a bit lower. Apple could fall a bit lower. In general, the overall market can fall a bit lower, okay? But these are really the levels that you want to see hold. And, you know, we could end up creating another sort of falling wedge if we fall to this area here on Amazon. And then this is still just a bull flag, a bit more steep to a level of support and a bounce over here. So we're still in bullish structure on Amazon, okay? Google, same concept. Still in bullish structure. Showing some weakness around the bearish below level we held above it. Same concept. I would be very surprised if Google just becomes very, very bearish now, given the fact that they have quantum computing power and everything soon. Microsoft, you can see Microsoft, it's been one of the weakest stocks that I've been saying, and it's been very, very bearish looking. Continuing to show weakness below the bearish level. This is clearly not a very bullish setup, but what we did end up doing is this was a bear flag. The bear flag broke lower and it hit its target. And once it hit its target, it bounced, and now we're back to its level of support, almost on the dot. This almost held double support on the dot. So yes, I mean, this is clearly not a bullish setup. This is not like, oh wow, this looks great, time to go long. Obviously not. Of course, I mean, like if you're watching this is very, very difficult to be bullish, right? But you know, once you get down to 410, once you get down to 408, 405, okay, we are at support. Once we get down to these levels, this is support on Microsoft. We haven't seen prices below this since basically the beginning of 2024. So this is major, major support we're about to enter on Microsoft here. So that's why, you know, being extremely, extremely bearish, kind of tough, only because these large tech stocks are either showing bullish structure. Google and Amazon are showing bullish structure. Microsoft is getting very close to a level of support. Apple is very overextended to the downside already. So far, you know, my thesis is being justified by what I'm showing you. Nvidia, big drop like this, a continued fall lower, right down to this support again. You know, almost back to the exact place that we ended up breaking out from, where we initially went long. We went long at 136. We are literally back to that same exact level. We were holding 136 calls. This is below 136. So it's pretty hilarious how this ends up going. But, you know, once again, we're at a downtrend sort of level of support on Nvidia. You're going to see a lot of downtrend levels of support that are going to start looking like a level of support. And Nvidia, this is one of them. So we are holding this level here. This is 134. Very, very important on Nvidia. It's very tough to be bearish here, guys. It's very tough to be bearish here. AMD, one of the other ones, just another like a downtrend level. You could see that we're coming very close to it. On AMD here, we're outside of the lower level of the Bollinger Band. Once again, is this the time to start going short? Definitely not, in my opinion. This is definitely very, very, very difficult to start being short. Because where would your target to the downside be? 112? 112 to 110? Where is the upside target? All of this. So the risk reward to be bearish is just not there. In my opinion, it's just not there. The thing is, now that we basically looked at all the large tech stocks, this is basically, we could take a look at Tesla as well. Tesla is holding support. It's downtrend level that needs to break to the upside, and this is going to explode. You can see, the downtrend level, right? Break to the upside, pull back, and it's going to explode to the upside. So it's just like a ticking time bomb. It's just a matter of when we're going to bounce, in my opinion. Okay? Now, what I want to show you guys is the SP 500. So, what I could show you. Okay, so this is the SP 500, the SPY, on a 1 hour time frame. So this is the highs from January 6th. I made a downtrend level from these highs. And you can see that we're hugging this downtrend level. The longer we remain above it and continue hugging, right? We can continue dropping very, very, just slowly, right? The longer we remain above this level, the higher the likelihood we're going to bounce off of it. So this is, again, just one of those downtrend levels that we're going to continue seeing on the overall market. And they're trying to paint these. So, we had a downtrend. It created a nice little setup to bounce, but then we ended up gapping down lower. So now we're in sort of bearish free fall mode. I initially, guys, I wanted to go short on the S&P at around 584. I wanted to go short at around 584 on the S&P. And we were day trading. I wanted to swing short the S&P, the NASDAQ, and Nvidia at 584. Unfortunately, we were looking at day trades. I got the signal, right? My algorithm showed me the signal. I was just like, this, I'd rather not go short into weakness. I didn't take it. What ended up happening was we dropped from 584 to 578. So, and then it just so happens that on Friday as well, it was one of the only days that I think I've ever had where I had 3 losses in a row. So, unfortunately, just some really, really dumb mistakes occurred on Friday. So that's the fun part with trading, but it is what it is. Now, what my point is that these large tech stocks showing bottoms. SPY on the 1 hour time frame is trying to show that it's hugging a downtrend level, and it's trying to show that it wants to bounce. So anytime that you see like an aggressive downtrend level and you're holding it, right? Once you start showing some strength, it's a good indication that we might end up bouncing. Does that make sense? So this is just one of those things, and it'll add to the potential fire of a bounce, in my opinion. So now here are the two main biggest bearish things. It's the daily time frame of the S&P 500 and the NASDAQ. Okay, so this is the daily time frame of one of the S&P 500 contracts. This is a very, very ugly, very, very bearish daily candle. Okay, clearly, very, very, very bearish. We broke big red candle. It wants to drop lower. What they did, Friday's close, they painted a very, very bearish picture. You can't even deny this bearish picture. This, as well as the NASDAQ, the QQQ, clear cut, very, very bearish picture. To say that this is a bullet, wow, we held support, it's time to go long. To say that you should go long here, preposterous. Now, my point is that yes, we could have a bit more room to go. The daily time frame on the S&P and the NASDAQ showing some weakness. The Russell as well showing weakness, right? Clear-cut weakness. My point is that the large tech stocks, they're getting close. They're about a rock's throw away from major levels of support. So regardless of how bearish these setups start to appear, going extremely short down here is not the way to go. And to wrap it up, to go extremely short when things are very overextended to the downside is a fool's errand. It is a fool's errand. It never works. It has never worked. Don't get used to it. Unless this is the COVID crash, this is not going to start just continue dropping. I could be wrong. There's 2 instances where we ended up just really, really vomiting. That was Jackson Hole, COVID. Do you want to bet that this is going to be one of those cases? Probably not. So I hope you guys enjoyed today's video. Please smash that subscribe button. Slap that like button. Do all that good stuff. I hope you guys enjoyed. I hope you guys had a good Sunday. I hope you guys had a good weekend. Today is Saturday. But regardless, I hope you guys have a good weekend. Love you guys. Have a good one. I will see you guys bright and early tomorrow, Monday morning. All right? Love you guys. Have a good one.